Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. President Trump will refrain from imposing tariffs on goods from European nations that are opposed to his effort to take over Greenland. Earlier, in a post on Truth Social, Trump cited a framework on a future deal reached with NATO. This followed a meeting with Secretary General Mark Rutte in Davos. Here is Trump speaking earlier with reporters.
It looks like we have the concept of a deal. It gets everything we wanted, including especially real national security. Well, the deal is going to be put out pretty soon, and we'll see. It's right now a little bit in progress, but pretty far along. It gets us everything we needed to get. It's the ultimate long-term deal, and I think it puts everybody in a really good position, especially as it pertains to security and minerals and everything else.
Now, this decision marks a reversal for Trump, who had repeatedly attempted to coerce European leaders over the issue of Greenland. And that's where we begin our conversation with George Friedman. He is founder and chairman of Geopolitical Futures. George spoke with Bloomberg TV host Paul Allen and Avril Hong.
In President Trump now saying that the U.S. is going to be involved in Greenland's mineral rights, we still don't know what the content of this framework of a deal is. But do you think we could have got to this point without all the threats?
Probably. But at the same time, you have to understand the strategic importance of Greenland. This is not a minor issue. Since the Cold War and today, this is one of the primary routes between Greenland and Iceland for Russian submarines to enter the Atlantic. Also, with the evolution of warfare and the polar warfare, Greenland is a very important place. Why the president demanded to own it, I don't understand. We have full access to it. I don't know what kind of deal was made, but this is not trivial. This is not a random thing about Greenland. It matters.
No, and to your point, it is effectively NATO territory being controlled by Denmark, so one assumes the US could pursue whatever military aims it had in the region without resorting to threats of tariffs, etc. But what do you think has caused the change in the president's rhetoric here? Because it seems the messaging out of Europe didn't get any softer. If anything, it got more stern.
The president has a tendency, as in business, to make the first demand and make it absolutely unnegotiable, and then to negotiate. So if you've ever involved yourself in business negotiations or a poker game, you understand that it's a head game. You want to get ahead of it. It's not normal in diplomacy. It's not the way it's usually done, but it's the way he does it.
We all know how mercurial the president can be. On that note, perhaps if you could give us a sense of your judgment in why he backed down in such a manner. Could it perhaps be the market reaction that we saw earlier in the week?
I don't think it was random. I don't think he's unpredictable. He frequently makes very aggressive statements that he then backs off on. That's how he opens negotiations. He's done it many times in many ways. If you've been watching him very closely, this is not out of the norm. At the same time, it was extreme because it affected markets and other things very gravely for this day, and he then backed off. So his making an outrageous demand and then backing off is his style, and it's unnerving at times, but he's the president.
With that in mind, how much damage would you say has been caused with the relationship with Europe?
I don't think the Europeans have much of a choice in having a relationship with the United States. Many times they have resented the United States or felt the United States is behaving improperly. They got over it. It's not a question of their mood, it's what they need. And NATO needs the United States to be part of it. The United States needs NATO to protect against Russia and so on. So therefore, the reality is what the reality is, and whatever the talk is not that important.
Yeah, you point out that this is not usually how diplomacy is normally done, but these diplomatic protocols are in place for a reason. I mean, we heard from Canada's Prime Minister Mark Carney saying this is the end of the rules-based order. So how does NATO move forward from here? What does the alliance look like in the remaining 3 years of President Trump's term?
Well, in many ways, diplomacy is a slow-moving thing where propriety is very important. Sometimes it gets in the way of getting things done. Trump is not a diplomat. Trump is the president of the United States. He comes from the business world. He treats it that way. Each time he does something that appears outrageous, it turns out to have some sort of sense. And therefore, it should be understood that the norms that have existed for 80 years, since 1945, are falling away, partly because of Russia's problem because of relation with the U.S. and China. These are all evolving. And at this point, the norm that's been in place for the past 80 years is no longer the norm. As for his choice of doing it this way, well, he's the elected president of the United States, and he gets to do it. But I don't think he meant...
What's your analysis of how this would have been received in Moscow and Beijing, the drama of the past couple of weeks?
Well, just as the United States can't make out Putin and why he can't reach an understanding, I don't think the Russians understand the Americans under these circumstances. This is a very different president, and they're used to presidents who operate in the framework that we cannot have tensions between the United States and Europe. This is a president who sees Russia as basically having failed in Ukraine and not being a threat. And this is a president who therefore sees the relationship with NATO evolving. NATO may not want that relationship to evolve. He does want it. So if you understand that, then it doesn't seem so odd that he's breaking norms.
That was George Friedman, founder and chairman of Geopolitical Futures, speaking with Bloomberg TV host Paul Allen and Avril Hong here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. The Japanese equity market is pushing higher after a rally in U.S. stocks. All of this is in reaction to President Trump reaching a framework with NATO on a future deal on Greenland and the entire Arctic region. And it means that Trump will not resort to the use of tariffs on goods from some European countries. For a closer look at some of the price action, I'm joined now by Bloomberg's Alice French. Alice covers the Japanese equity space. She joins us from Tokyo. Thank you so much for being here. This has been a week of tremendous volatility in Japanese assets, whether you're talking about stocks or even the bond market. Can you supply some context here for all of the commotion that we have seen?
Yeah, I mean, what a week, right? And I think it's kind of been a culmination really this week of nerves that have been brewing for kind of the last couple of months, really. So most of this caution basically comes from the new Prime Minister, Sanae Takaichi, who came out on Monday and announced this snap election that we're expecting for February 8th. And along with that announcement, she said that she's going to plan this temporary tax cut on food purchases, right? Which of course is, I suppose great news for consumers. And at the time, particularly kind of food related stocks like supermarkets, etc., they enjoyed quite a nice rally. But in the background, of course, there are questions about how will this be funded, right? She hasn't come out with any kind of specific explanation about how this, will this require things like extra bond issuance? How is she going to make up for this in terms of kind of government finances? And there's already been so many worries about Japan's fiscal burden since she came into power in October. I mean, partly because of her kind of pro-fiscal expansionary policies. She's already come out with kind of the biggest extra budget since COVID, plowing money into things like AI, infrastructure, defense, etc. And again, that's pretty good for the Nikkei. That's pretty good if you're a stock investor and you're going to kind of benefit from this expenditure. But if you're in the bond market, obviously it's quite worrying, and it's happening against a backdrop of, yields rising worldwide, right?
So we had the meltdown in the Japanese bond market on Tuesday, and then repercussions kind of happening across global bond markets. It also raised some alarm, I think, in Tokyo about potential losses for some of the Japanese banks and brokerages, at least at the time. Has any of that subsided at all? How are the banks faring?
Yeah, it's a good question. I mean, as you say, kind of midweek, we saw a couple of days of declines there, particularly for regional banks that are perhaps slightly less able to control those risks and may have had to take some impairment losses on those bond losses. But, the banks are, they're recovering. They're having an okay day today on Thursday. And, there's still so many tailwinds, right, for the Japanese financial sector from the BOJ's rate hikes and kind of expectations that they will get more revenue from higher higher interest rates. So I think there's still, a rally story for the banks there in the background, but certainly short term, they saw some pressure because of all of this bond drama.
So help me understand the degree to which the Japanese equity market can benefit from some of the enthusiasm that we're still seeing around artificial intelligence.
Well, this is all kind of part of the Takaichi trade, right, which is essentially the idea that you buy into equities on the expectations of more spending. And I mean, Takaichi in her policies has outlined, things like quantum computing, chips, and of course, anything kind of AI and data center related for more funding, which people are expecting are going to benefit those companies that make those products. We know, of course, worldwide that the AI stocks are really up there at kind of close to record highs. And so there are a little bit of jitters, I guess, around potential overvaluations, especially for the big names like SoftBank, Tokyo Electron, etc. But in general, the mood here is that, the rally is going to keep going. Of course, it's boosted by Takaichi, but underlying, of course, is this continuing demand for AI data centers, memory chips in particular. We have Kioxia here that makes those memory semiconductors that's really been enjoying a nice run. And, overall, I mean, some people here predicting that the Nikkei could even make it to 60,000 this year, helped by the Takaichi trade. So the optimism is definitely still there. When
we talk about the AI trade in places like Hong Kong or even on the Chinese mainland, the conversation quickly turns into a conversation or a chat about initial public offerings. Is that something that's happening a great deal in Japan right now, IPOs?
That's a good question. I mean, the IPO market here was pretty good last year. We had some pretty nice ones. JX Advanced Metals, for example, which is linked to data centers, saw a pretty nice IPO. Of course, Kioxia, which came to market right at the end of 2024, has seen a brilliant rally and was actually one of the best performing stocks in the whole world last year. And I think that's really driven kind of a lot of optimism around IPOs in Japan. And actually, we're seeing kind of a push from across Asia among kind of startups looking at Japan potentially listing here because of some of the success that we've seen in the past few years.
So I mentioned the push higher for Japanese equities vis-a-vis the Nikkei, and I'm wondering whether or not this is also an illustration that no one, at least right now, given the calm that's taken place in the bond market, no one is expecting any drastic movement in policy from the Bank of Japan on Friday, are they?
That's the sense, yeah. I mean, I think a lot of people would be very shocked if they do anything but hold because of kind of the chaos that we've seen this week. But also we know that the BOJ, it's expected to continue on this kind of steady but gradual rate hike path, right? And obviously there was a hike in December. So the expectation is that, they'll hold steady. And I think as long as they do, we shouldn't see too much upset in the markets, but let's wait and see.
Have things calmed down in the bond market to a great degree relative to what we saw on Tuesday?
They have. I mean, there was quite a nice rebound on Wednesday, and since then, the calm has kind of come back. The finance minister did come out this week and sort of ask people to calm down, which seems to have helped a little bit. But having said that, the kind of mood here is that there's still worries, there's still a lot of caution. We don't know what Takaichi and opposition parties are going to ultimately come out and say in their election campaigns about these spending and tax cut plans. So the worries are still there in the background, but at least for the time being, there's a little bit of calm, I think. Yeah.
All right, Alice, we'll leave it there on that calm note. Bloomberg's Alice French, she covers the Japanese equity market for us here, joining on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.